Introducing Patrick Lang with the Business Modifications Group. Of course, I'm Jason Solomon. That's Scott O'Connell, Tactical Investment Advisors. Patrick, I want to ask you a question just generally about the business. How is business right now? Have you seen any changes in the last few months, or is everything kind of similar to the way it was last year?
Yeah, I think things are similar. I sell smaller to mid deals, and we didn't have the crazy appreciation and then kind of decline that took place maybe at the upper end of the market. So business and activity is bit strong. We're happy.
That's great. Now, do most of your customers, do you think they understand what mid-market means and upper-end market? I remember when I was getting introduced to business brokers and trying to understand your business, hear a lot of terms that are thrown around, and I really didn't know what that meant. Can you share with these business owners what that means? How big are those businesses?
Yeah, absolutely. Great point. You're 100% accurate. So most of my deals are on the smaller end of the spectrum. Companies doing $1.5 million to $10 million in sales. Really, in my sweet spot is probably $2 million to $6 million, the bulk of what I do. I was fortunate to sell 24 companies last year, and probably 2 or 3 of them were above 10 million in sales, but the bulk were 3 to 5 probably.
So are most of your sales happening with large institutions, PE groups, or is it mom and pops purchasing other smaller organizations to try to grow their business?
Combination of both. Really, when I first started, I've been exclusively selling heating and air and plumbing for a little over 6 years. It's kind of weird. My first 2 years, it was mom and pops. My next 2 years, it was predominantly just private equity. And then the last few years, 18 months, has been really a mix of both mom and pops and some private equity shaking in the kind of blanks on where they're trying to get to.
Why do you think the change? Why does it go from mom and pops to private equity? Is it just the interest that PE has in certain spaces, or why does it change?
Yeah, I don't understand the PE world real well. To me, it seems like they all get a playbook on January, and it says, hey, we're all going to love this industry, and then they all rush to go buy it, and then they move on to something else. So I don't understand that side. I think what I'm seeing now from the buyer side is a lot of kids whose parents potentially sold to private equity. Kids didn't like being there. They worked for their mom and dad forever, and then now they sold and you're working for the man kind of thing.
Right.
And so I think that shifted, and they watched private equity grow, and they saw them invest in training and advertising and marketing and these things. And so now they're doing it on their own. I have a lot of buyers who worked at private equity firms, watched these bigger ones grow to hundreds of millions in sales, and they see that we can do the same thing at the smaller end of the market. And so I think it's a little bit of everything. What
type of structure do mom and pops and PE groups want to buy? Meaning, do they want to buy S Corps? Do they want to buy C Corps, LLCs, or does it not matter to them?
Oh, I don't know that it really matters. The bulk of what we do, probably 95% or more of what we do are asset sales. So they're not actually selling the corporation or the stock of the corporation. They're buying the assets of it. So from a buyer's perspective, it's a tax advantageous way for them to buy. Obviously, they get a lot of depreciation up front. And so I don't know that they necessarily care who they're buying the assets from.
So as long as it's structured as an asset sale, they're going to get that depreciation that they want. But if it's structured a different way, they may not get it.
Exactly.
So then does it matter? And if we're going down a path that's more for a CPA, you can totally stop me. But does it matter if it's not an asset sale? Does it matter at that point if it's a C Corp, an S Corp, or an LLC?
Yeah, I think it does.
Yeah, for sure. So as long as it's an asset sale, we can go down that path. They'll get those benefits, and they're not going to mind. And if you're not doing an asset sale, though, it would be a different conversation. So very important for these buyers to understand how they're structured, how the sale's going to be structured.
Yeah, and we market it that way. So most sellers don't know the difference between a stock sale and an asset sale, right? That's not what they do. And so there's an education curve there.
Uh-huh.
But specifically in the trades, when we're selling a business as a stock sale, they're buying that stock in that actual corporation. What, in addition to the tax differences, from a buyer's perspective, they're also assuming all liabilities today the company is founding.
Right.
So we're talking about a trades business that does construction related work, and there's often liability with that.
Absolutely.
So most buyers are scared of that liability. 20, 30, 50 years of construction that's taking place.
That makes a lot of sense.
Yeah. Hey, Patrick, could you elaborate a little bit and tell us your feel of how many deals go south because sellers aren't aware of their bottom line, or they don't have their books in order, or whatever it may be? Give us a little bit of a understanding of what complications you see during the process when it comes to the sellers and not maybe fully understanding what it takes to sell their business.
Yeah, a lot. And so, so I try to preempt that, right? I charge a commission for selling a business, and if it doesn't sell, I don't get paid. So protecting my own bottom line, I try to make sure that the seller fully understands what the process is going to be like going through, that it may not be a lot of fun, that they're going to be poking and prodding and asking questions about their numbers that they probably don't even know themselves. So we try to educate them on that. I also gather all the financial data before I go to market to prevent the deal from blowing up. So we typically use tax returns in all of our summaries because I find P&Ls may not be 100% accurate. And most people are not going to pay extra taxes to sell their business for a higher price, right? They're not fluffing the numbers and adding sales. So it's typically a safer way, in my opinion, to protect from the blowing up from unscrupulous sellers. And so IBBA, the International Business Broker Association, did a study, and they said only 20% of businesses listed fell. So 80% failed to make it across the finish line. And I think there's a variety of things that go into that. One is a broker who's not doing a good job. Second is a broker who prices it too high, so it's not really in the market. And then I think it's everything else that comes with it. It's the bad numbers, it's not knowing, it's no system, it's family involvement, and there's so many things that can make a deal go south. And numbers are typically the leading indicator of that.
Absolutely.
Yeah, and so you mentioned gathering data. I'm just going to take a guess here, and I want you to give me your experience. But when you're trying to gather the data and the numbers and the tax returns, whatever it may be for the sellers, how much of a challenge is that for you? I mean, I would imagine it takes more than one try sometimes with some of these sellers. Can you elaborate a little bit more on what your experience is? And are there cases where you actually don't get all the information that you need in order to proceed?
Yeah, and what do you do in that case?
I don't list it. I mean, that's the fast answer. If I don't have the numbers to properly price a business, I'm not going to go to market. And to me, that's a red flag, right? If I'm begging you to give me information and begging you, and you can't ever get it, I know the due diligence process is going to be a disaster.
Yeah.
Because if I'm asking you for tax returns and a P&L and you can't provide that, what's it going to be like when 5 CPAs are saying, hey, we need to have a call and we've got a spreadsheet 10 pages long of all the things we're going to want from you? It's probably not business for me to list because it'll never make it across the finish line. And so it is challenging sometimes. Some people lack of knowledge. Some people are embarrassed, right? They have this preconceived notion that everybody else's business is perfect and they're the only one that's not. And in some potentially could be not wanting to share bad information. And so I think a combination of both.
Not all business brokers are created equal, though. There are plenty of businesses, correct me if I'm wrong here, but there are plenty of businesses that do go to market with that bad information, don't they?
Yo, absolutely. Yeah, and I think, and I hate to throw other brokers down, and I hate to defend somebody who's doing something wrong at the same point in time, but I think many brokers think, well, if we just get the listing, we'll be able to get that stuff later. And if you don't do a lot of deals, that I think makes the broker more willing to do something like that.
Absolutely.
They're running a business and need to get sale and need to get income. And so I think sometimes their judgment gets clouded based on that, when they're really hurting themselves because you're going to waste time on a deal that's never going to close, that you could be spending time working with the seller who can get you what you need and can help you get it sold.
Well, I think it matters. Being a financial advisor and working with several different business brokers and talking to hundreds upon hundreds of different business brokers, I know that you don't want to give anybody a bad name, but selling your business is one of the largest financial moments in these people's lives, next to purchasing their dream house, probably. And so if they're using somebody who doesn't have the experience, who doesn't know the things that people like you know, it matters. It's going to impact that financial moment and from so many different angles. So I appreciate you being modest and not wanting to probably toot your own horn, but I'll do it for you because it matters. And working with somebody like you, especially in the HVAC space, where I've found that the financial data is very challenging. So you taking that extra time, you getting to know these owners, and everything that's involved with you helping them list and sell their business, it matters. And so I don't really want to downplay that. I don't think it's bashing other people. I think it's bringing you up, which you deserve.
Well, I appreciate that, and you can talk good about me all you like. I won't argue with you. I think, and you brought up a great point. For most of my clients, it's the biggest sale of their life. And most of my clients have never done it, right? So it's uncharted territory with their largest asset. And I believe as a broker, we owe it to them to do as much right as we possibly can, because there's no takebacks, right?
That's right.
You sell the business and you get a bad deal, or accept things because you didn't have your stuff in order, and now you have to take a lower offer, owner finance, or other things that could have been prevented, and they didn't know that because they don't do it. They fix air conditioners all day long. They don't sell businesses, and so I really think as a broker, we've got an obligation to be the best we can for them, and that starts with gathering the right.
Yeah, and you brought up a great point, Patrick. I mean, really what you're doing is you're building a relationship with your clients, with the sellers, right? In other words, this is not a 2-week venture. I mean, talk to me a little bit about the time it takes to possibly close a deal and how much time, maybe not necessarily hours, but how much time do you spend with your clients and how important is that relationship to you?
Great point. It is all about the relationship. And I tell people when I first talk to them, hey, if I'm not the guy for you, it doesn't feel comfortable, let me know and I'll help to find you the guy and the girl. Because I think you're trusting them with your largest asset. And there needs to be a mutual respect there. And we need to get along, in my opinion. And so some deals could take up to a year from start to finish. Some go as fast as, I've had one we closed in 30 days. So the 30 days is by far the exception to the rule. Typically a 3 to 6 month process is real. And we're talking, like I have listings right now that we have a lot of activity in. I'm talking them 5 to 10 times a week. And we're doing the phone calls. I'm spending, potentially 5 to 10 hours a week with them. And so, it's good that we get along because at the end of the 10 hours, we could not be friends. And so it's worked for us that we have a good relationship. And I mean that one seriously. If I'm not the guy, let's not do business together. Let's find you the person that you feel comfortable with, and let's get you going with them.
Yeah, no, that's a great point. I mean, Jason and I spend the majority of our time in the retirement planning business with business owners and individuals. Tax planning is part of it, but retirement planning, I want to talk about that for a moment with some of your clients. A lot of business owners, build their business with the end in mind. And many business owners, in our experience with other industries, are really highly paid employees. In other words, they own the business and they may be making $500,000 a year, but they don't have a plan in place for the time to sell, or they don't have a plan in place for any other potential, pitfalls such as disability or death. Talk to us a little bit about how we can kind of change that narrative to help business owners plan for the future. What do you see in your experience and in your travels as far as, are we close to seeing that story play out a little bit, and what can be done about it?
Great point. And any chance that I can, I preach this. I was at a seminar last week specifically about it. Everybody thinks, just like with you guys in retirement planning, and it's just somewhere down the road, right? It's not, you're not really planning for it. And thank goodness working with you, you can put a plan in place to help them do that. Most of my sellers, when they get to me, they didn't know what their business worth. They went to a trade show, they heard somebody sold, and I think theirs is worth too. And so I'm consistently preaching, begin with the end in mind, understand where that exit is, work with your financial advisor, and find out what does the check need to send for you to walk away. And then from there, you can decide if I'm working because I just enjoy it and I want to be here, but now I've crossed that finish line and I don't have to be. Makes going to work a lot easier when you know you don't have to be there financially, and get evaluation done. We offer complimentary evaluations. I sit at way too many tables with husbands and wives who are 60, 70 plus years old, and I have to tell them business has no value. They spend their entire life working for something, and they think that's their retirement plan, and I have to tell them nobody wants it. I have a video on my YouTube channel I talk about. It's called Your Babysitter, right? I'm nice business owners. Your business is their baby. And I did a video, which is kind of joking about it, but it's because I spend way too many times at way too many tables saying it has no value. You built it wrong. And they weren't saving in other vehicles. They weren't buying other investments. That was it. They devoted their life to this business. And now it doesn't have any value. And so now what? And so the real answer is work with a professional, get evaluation done, and get it done often. So you know where you are, and then tie that into your financial plan of where does that need to be so you can know what you're working to it. And so it happens way, way too often. I had two people kind of sat, two different scenarios. One listed with me a year ago. I told him the value. He didn't like it. We listed it. We got activity, and he called me back and said, you know what, take it down. I'm going to run it for another year, and I'm going to build the numbers up, and then I'm going to sell it. Okay, great. So we take the listing down. A few weeks ago, son called me, and dad died.
Oh, Jesus.
Dad was the sole license holder in the business, and dad was also the sole owner of the corporation. Mom didn't have it to the board. So now we don't have a license holder, and we technically don't have an owner that can sell the business to go through probate now. And so mom's running a business that she didn't want to run, and we found him a license holder to come in and qualify the license to at least keep it operating so we can sell it. And now hopefully we can get it through probate relatively quick so we can get the authority to sell the business and then go sell it. Then a week later, the guy calls me, who I've talked to for the last couple of years. We've done some evaluations, and he calls me and says, okay, I'm finally ready. I want to get a final evaluation and go to market. That was like on a Monday. On Friday, son emailed me and says, I see my dad was talking to me, and he died yesterday. And we need to now sell the business, looking on him. So they were so close to getting a plan in place. I had another sellers, we listed it. I've had two. We listed them for sale twice now. It's happened. Listed it for sale, and they died in the process.
Oh my God.
And so I mean, that's obviously absolute worst case scenario, right? And I'm not here to be doom and doom, but that's real world. And so not having a plan in place, leaves your family unprotected. And so you spend your entire life gaining this, in theory, for you and your family, and now you're passing down it.
Yeah, I mean, that's something you mentioned about, the premature death or not planning for that. And when you do have to sell the business or liquidate the business, my guess is, and correct me if I'm wrong, you're getting a lot less value than it would have been if you prepared. In other words, you're getting pennies on the dollar potential.
Right.
Right.
Yeah, I mean, we need to sell it. We don't have a license holder. We don't have somebody running it. We've got to sell it.
There's an
So
urgency there.
yeah, you lose flexibility.
I think people, going back to what you were saying earlier, it's amazing. I understand human behavior just from 23 years of working with people and working with their finances. And we are all emotional people. And when you're selling a business, it doesn't matter what your financial plan says you need. Your business needs to be separate from that. And I see a lot of business owners who cannot separate that. And I think, what was the name of your video that you named? Your Baby is Ugly?
Baby is ugly.
Yeah, I mean, business owners really need to pay attention to this. It doesn't matter what you need. It's not about you. Financials and what your business looks like is completely separate from your personal financial plan. And that cannot be harped on enough. I see it too many times. I need $5 million so that I can retire. Well, the person who's buying your business doesn't care what you need. They may think you're a nice person. They may think that you have a nice business, but if your business is worth $3.5 million, they're not going to pay you $5 million.
Yep, 100%. Market doesn't care what you need.
That's right.
At the end of the day, they're going to pay you what it's worth, and not that you're a sweet, nice person and you meant to do good, but it just didn't work out.
Yeah, and speaking of those trade shows, we've been to several of them as well. How many people on the panel are talking about the multiples that they got on their business? Your business is not their business. And the buyers you're working with may not be the buyers that they're working with. Every situation is different, right, Patrick?
Well, and I hate to say it so bluntly, but I think many of them are lying too. Nobody brags about the hand deal they got. Right at the end of the day, nobody's going to stand up on stage and say, "Hey, I took it all as an turnout, and I made that with money. And if it doesn't do well, I'm going to be broke." They're going to stand up and say, "I got a crazy multiple." And they do, and you're right. They don't say, "By the way, my company was doing $100 million, and I had GMs in place, and I had separation with this." They don't say that. They just say, "I sold it for X," and everybody cheers, and now everybody thinks that's what theirs was. And most of them are not telling the truth.
Yeah, part of the reason we're doing this with you is that it's frustrating to go to those events and hear all of the stories. And I want people to find this podcast, whether they're in the roofing industry or the HVAC industry. I want them to find this podcast and hear us talking about how it really goes. It really doesn't matter what you heard. Most of what we heard related to our space, financial planning, investing, was absolutely nonsense. People do the same thing with investments. They're not going to tell you about their losses. They'll tell you about how their crypto made them 200%. They'll tell you about how, they made 40% in the stock market last year. They're not going to tell you those bad stories. So you want to work with a team who doesn't necessarily give you the information that you want to hear. You want to have everything validated with facts and data.
100%. And I think, it's been, you touch on it, all this activity in heating and air, and now there's same activity happening in roofing, and it brings out all these experts, right?
Yes.
The thing I think that lines up with your industry well, I've heard a long time ago, is not to mistake a bull market for brilliance.
Absolutely. Thank you for saying that. We didn't even talk about that ahead of time, by the way. That is so beautiful.
Have a great year in the market, and it's easy for everyone to pat themselves on the back, But what about the overall picture, and what about when things aren't so good, and all those things? And it's the same way in selling business. When somebody can stand on stage and say, "I did this," well, show me the check, right? At the end of the day, show me that you deposited that in your bank account, and I'll believe you.
I love that. All right, so let's talk about taxes for a minute. You're not a CPA, we're not CPAs, but there's a lot of things that business owners do in your space and other spaces that change the P&L dramatically. A lot of those things are not good things. Maybe you can give us a couple of things that you saw. I'm sure that we can make the audience maybe laugh or cringe. But then there's some things that you can do on the tax side that go back to our conversation about having a backup plan and building a retirement where you get those tax benefits. And those are very clear add backs. Can you speak to tell us one crazy story about some things you saw in a P&L that you really didn't want to see?
There's too many. Really, it's crazy for stuff I see. I call it creative accounting, and and I try to preach to sellers, you can't get paid for money we can't prove, right? And you're eliminating half the buyers in the market, because if they're going to get an SBA loan for the business, we don't want them going to the federal government saying, "Hey, I'm buying this business here. Although the tax return shows they lost money, they really made $200,000. I can show you how." I mean, that's
Love that story.
what you want. You've lost that buyer. I mean, farms and hunting leases and vacation houses, and I mean, Porsches. The example I see a lot. My wife drives a Porsche, and it's a business expense. Well, what heating and air company needs a Porsche? I mean, so. And there's certain things we can add back, right? I mean, there's things that are provable that are borderline. I've been self-employed my entire adult life. I understand being creative, but people spend so much time to save money on taxes that they're losing money on sale price. Yeah, so $100,000 of profit, if you reclassified it as cost of goods in your top tax bracket, you're saving what, 37%? If we got you a 5-time multiple, you could have made $500,000. Instead, you saved $37,000.
Sure.
I mean, mathematically, it just doesn't even make sense.
Yeah, and so we hear a lot of brokers talking about these stories that are just, I can't even wrap my head around it, but it happens all the time. These are not tax saving strategies. These are high risk, poor decisions. But then there's retirement plans you can put in place. So say that this HVAC company has 10 employees. They want to take care of their employees. They can incentivize them to stick around, create a defined benefit plan, create a solo 401k or a 401k that everybody can participate in. These are building for your future. You may not get that golden egg at the end of the tunnel. So you have to have things like this in place for yourself, for your employees, right? But also just in case. What if you don't sell that business? What if your baby's ugly? At the end of the day, you've got to take care of yourself and your future now, and you do get a tax benefit right now for making those decisions.
And it's easy for us to add back, right? We can see how much was deferred. I mean, it's crystal clear, and we can add it right back to the income, and so it doesn't hurt them. So it helps them. And as you said, the retaining of employees, that's the biggest thing facing the trades currently, is lack of qualified talent. There's more work than there is people, and they're jumping ship, and giving somebody help in their retirement plan is certainly beneficial.
Yeah, and I would say what we're really talking about too, because if people are listening to this podcast, they may be saying, well, I don't understand all this. I don't even know where to get started. And our experience is most people don't take action because it's the start that stops them. And I think what we're hearing is that, successful business owners have a team, right? They have tax professionals, they have financial professionals, they have business brokers that they partner with along the line over the years to help them with these situations. They don't have to know all of this, right? I mean, in other words, I would imagine
they're not going to know it all.
Yeah,
we don't know it all.
Yeah, they just don't have the expertise, and they don't have the time. And so I think what we're hearing is, in your experience, I think my question is, the business owners who have their ducks in a row, they're not doing it by themselves, are they?
Absolutely not. You can only do so much. I don't fix my air conditioner. I don't work on my own car. It's not where my time is best served. And using air conditioning as the example, I mean, my clients are preaching to everybody else, don't work on your own stuff at home, but then they're trying to look at all these different things, and it's absolutely better than bringing the team who does it on a daily basis, because it is changing every day, whether it's tax code, whether it's interest rates, whether it's lending options, whether it's licensing. It's changing every day, and to stay on top of it's a full-time job just for the people who are in their niche. I leave it to the people to do what they need to be doing. I'm not giving tax advice. I'm not an attorney, and I don't claim to be. And so I refer those people over to the ones that do it all day, every year.
Last point here. I was on one of your Zoom meetings that you had, or your webinars, and you talked about tiered valuations. real valuations versus tiered valuations. Can you speak about that again?
I have to think back to what specifically we were talking about in network. Tiered valuation.
I'm not sure if this was when you were talking about how some people were talking about, actually getting cash for their business versus getting $3 million cash and having to earn the remaining $6 million.
Great, I appreciate that. I'm getting old to forget things. So, a lot of buyers in the marketplace, and specifically with these private equity buyers who are used to doing bigger deals, love to time their mouths. I'm not a big fan of it. Most of my clients are retirement age. They're done. You're not looking. They call it the second bite of the apple. So you sell your business and leave some money invested, and then when that company does well, they'll potentially sell, and then you can get money. You can get paid again, or get paid on that portion, or they'll pay it through the performance of the business moving forward. So if you normally do $4 million in sales and they hold back some money, they say if you don't do $4 million the next year, you won't get that money they held back. Or if you do $4.5 million, then maybe you'll get a little extra money. I'm not a fan of it. One, because the age of my clients, right? Most of my clients are retirement age, and they're not looking to take a lot of risk. Second part of them is they won't have control of it anymore. They're not there. They're not running it. They're not doing it. So I think it's unfair to have future performance be tied to the previous owner who's not there calling the shots anymore. It also, rare cases, but it opens up buyers who potentially may lack a little bit of ethical responsibility, and they may slow things down. A lot of times they'll tie it into net income. Well, if they pay out bonuses or pay off vehicles or buy new things, now the business is less profitable, and they don't have to pay those bonuses or that earn out. So it puts them in a spot to not make the right decision.
Yep.
My preference is, what you're saying yes or no to. Just to me, in selling a business, the money part's the easy, right? We know what the number needs to be, and we either get that number or we don't. So it either makes mathematical sense or it doesn't. It's everything else that goes with it that makes it more complicated. So are they asking you to pull the note? Are they asking you to skip around? Is it tied to a second bite of the apple or a future sale? All of that adds layers of complexity. And with each layer of complexity, to me, is an opportunity for you to make less money. And if your plan says you need to have X amount of dollars, we need to make sure you're getting X amount.
That's great.
Patrick, do you have any questions for us? I know that's it for our questions for you. You've done a phenomenal job and transparent as always, as I've always seen you on webinars and YouTube videos. So I think the audience will appreciate everything that you've said here today. Have anything for us?
I don't have any questions. I appreciate you guys having me on. And if there's ever anything that I can help with in the future, certainly don't hesitate to reach out. And I'm happy to help or answer any questions if you want anything that I can to help.
Well, I think getting these type of videos, podcasts, whatever you want to call them, out to the public is important. You've done a great job adding videos to YouTube. They're very real situations. I think there's too much fluff out there, and so we want to produce as many of these conversations as possible. Thank you so much for joining us today.